Welcome, it's Brad Purvis from Duncan, Dovico and Below the Bottom Line, and again we're introducing our educational series on the topic of self-managed super funds, and today I'm joined by my colleagues Rory and Nasr Hussain. Welcome, gentlemen.
Thanks, Brad.
And we're talking about building the super nest egg and how can we get money into our self-managed super fund. Now there's a number of different ways in which we can do this. We're going to talk about them today. There's non-concessional contributions, there's concessional contributions, there's rollovers, there's pooling, and there's also some gearing opportunities. So Nasr, let's start off and talk about non-concessional contributions. What does that all mean in plain English?
Yeah. Non-concessional contributions were previously known as undeducted contributions or after-tax contributions. So there's no tax on when you're putting in money in your super fund. It's pretty much, when it goes into your super fund, it's tax-free, and when it comes out, it's tax-free to the member.
So it's effectively money that we might have, in our pocket, so to speak, that we're putting in, and we've already paid the tax on it.
Yep, absolutely. So there are different there are caps related to these non-concessional contributions. The first one is where the member can put up to a maximum of $150,000 per year, and $450,000 for 3 years, which is called bring forward rule.
Okay, so they're the limits, and that's how that works. So we're not claiming a tax deduction. Now, Rory, concessional contributions slightly different.
Yeah, concessional contributions, you can also call them employer contributions or member deductible contributions. Currently, that they stand, there's a individual cap of $25,000 per year, but there's some proposed changes by the government where it will be from the under the age of 50 it will be $25,000, and then from 1st July 2013 over the age of 60 it will be $35,000, and then from 1st July 2014 when you reach the age of over 50, it will be $35,000.
Okay, so they're proposed changes. We just want to again reinforce there are a couple of other additions that George and I have produced on these budget changes. So if they do get promulgated or legislated, then that's exactly what will happen. In the meantime, we're just dealing with what we've got.
Yep.
Now, there's different taxing rates as well. In that, when we're in this accumulation stage, different tax applies to our earnings and our capital gains tax.
Yeah, well, it's 15% on earnings in the super fund, and depending on the capital gains event, it can be 10%.
Okay. All right, let's talk about other ways in which we can get money into building our nest egg inside super. Rollovers, Nasr, what are they all about?
Yeah, rollovers are the members. Usually what happens is that people change their jobs in the lifetime quite a few number of times. So each job, they've got a different super fund. So what they can do is they can, with all the existing super funds, they can roll over the super into the self-managed super fund and grow that fund, along with their family members and with mum and dad.
So what we're talking about there is that, so we could have mum and dad and two children, for example. They could each have two superannuation funds with other institutions. So they go to those funds, fill in the paperwork. The funds effectively draw a cheque, and the monies then come over into their self-managed fund.
Yeah, absolutely.
And as you said before, the good point you make there is about pooling. So those four members have all introduced their funds, and there's a pooling concept in terms of the investments that the fund's taking out. Okay, let's talk about gearing. That's probably our last point. Ross, there have been some changes a few years ago there that can help build the nest egg of a super fund.
Yeah, definitely. There have been some allowances on being able to borrow in super, which effectively can be certain assets you'll be able to borrow.
And crank up your, potentially with some conservative gearing strategies, build your super nest egg a bit quicker.
Exactly.
All right, there's another production specifically where George and I will take you through those gearing strategies. That's a really hot topic that's going on at the moment. All right, well look, they're really the key aspects around building a super fund nest egg. So for more information, feel free to contact the gentleman to my left and right at the practice, or your other accountants that you're dealing with here at DD, and details about how to contact us will be on the screen. And until next time, we'll see you below the bottom line.